Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Theiss. She's the Global Head of Equity Sales over at IHS Markit. We're going to focus on ETF trends today. Jen, thanks so much for joining us.
Absolutely. Thanks for having me.
Today, hot topic.
Yes.
ETF trends.
Hot weather outside.
Yeah. What do you see in the market?
Definitely. So very important milestone for ETFs. We just surpassed $5 trillion in assets under management. We believe over the last 20 years or so, ETFs are certainly one of the most prominent financial trends for the global marketplace. And we think there's a couple key aspects of that. One is the shift to self-directed retirement savings accounts. The second is financial innovation with respect to the tech sector, which is providing digital distribution for these assets. And the third, of course, and perhaps the largest, is the shift to passive investment management.
Well, let's talk about the inflows and the outflows there. What are your views on the continued inflows that we saw into the ETF? I mean, $5 trillion is a huge number. Do you think the inflows are sustainable?
We do. We do believe the inflows are sustainable. And when you take a step back and look at 2010, for example, this marketplace was just under $1 trillion in assets, 1,000 ETFs globally. Fast forward to today, it's a very different environment. 6,000 ETFs, $5 trillion in assets. And we have a lot of visibility into this marketplace with the IHS content. When we analyze our data, we're seeing net inflows of greater than $75 billion over the last 8 consecutive quarters. And given the mutual fund industry and how large that industry still is, we think there has been and will continue to be a shift from mutual fund assets into ETFs.
What areas of the market have really propelled the growth in ETF assets?
Yes, so one area that really stands out for us is smart beta. Smart beta is about an $800 billion asset under management space right now within ETFs. It's about 20% of overall ETF assets. And investors like smart beta because of its active nature, in the sense that smart beta employs really a quantitative approach of looking at different factors that ETF is exposed to. Things like dividends, growth, momentum, and that's a new way to characterize ETFs. Now, the one downside that investors need to be worried about is really making sure they understand the factor exposure and that they have the proper analysis.
How do you measure or analyze smart beta factors?
Sure. So we built at IHS Markit an independent smart beta classification tool. And this does two things. It allows you first to analyze the overall exposure of the ETF, and secondly, understand the exposure of the holdings. We also provide ETF comparison tools, so you can compare one smart beta ETF to another. And one of the segments of the market we think this would be relevant to is the retail market, whereby financial advisors need to make sure they understand the exposure to retail clients.
All right, and to wrap it up, what do you see on the horizon in terms of regulation in the ETF space?
So it feels like every market discussion ends with regulation, right? And certainly it's no different with ETFs. So within that space, the majority of ETFs today are regulated by the 1940s Securities Act. And that provides certain exemptive relief for the ETF participants. However, it's quite a laborious process at the moment to issue new ETF products, given that regulation. So we expect a new ETF rule proposal to come out in the next few months, and that will provide a consistent framework for new ETF products and providers. And we think that will lead to continued innovation in the marketplace. So bottom line is, even though there may be regulation, more growth to come.
All right, well, thanks very much, Jen, for joining us at MarketSite. Thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.